The Bank of England put markets in a spin Thursday, that after it failed to go through with a widely expected rate hike. Instead, the benchmark rate stayed on hold at a record 0.1%. Investors had bet the BOE would become the first major central bank to lift rates. Many had priced in an increase to 0.25%. But Bank Governor Andrew Bailey says policymakers want to see more data come in.
Many of you wrote articles saying it's a close call, and I think it is a close call. We spent many hours, we always spend many hours, but we seem to spend even more many hours this time over it as we should. And we are we're in a situation where the calls are close, they're quite hard, but that's just a reflection of the position we're in.
Sterling skidded following the surprise move. It was down 1% against the dollar in the moments after the news. UK government bond yields also tumbled, heading for their biggest daily drop since March last year. Traders expressed surprise at the bank's move to hold steady after it had hinted strongly at a possible hike. In October, Bailey spoke of a need to act to contain inflation. However, the BOE has kept alive the prospect of tighter policy, saying it would probably have to raise rates over the coming months if the economy performed as expected. Markets now see a 60% chance of a rate hike at next month's policy meeting.
Make it 6 in a row. That's how many days the S&P 500 and the Nasdaq have closed at record highs. The Dow, however, was left out of Thursday's rally. Blue chips dropped 33 points. The S&P 500 gained 19. The Nasdaq jumped 128. Investors had a bevy of economic data to sort through. America's trade deficit surged to a record $80.9 billion in September. Separately, wage inflation continues to be a problem for employers. Unit labor costs surged at an 8.3% annualized rate in the third quarter. Worker productivity had its biggest plunge in 40 years, according to the Labor Department. And in the final economic snapshot, new applications for unemployment benefits remained below 300,000 for the fourth week in a row, dropping close to a 20-month low. The market is now geared up for the government's release of the all-important hiring report, says Crossmark Global Investments' Victoria Fernandez.
So we had some really good economic reports coming out this morning in regards to the labor market. Obviously, the big labor report comes out on Friday, but for this morning, we did see jobless claims come down, and that was a positive. So I think it's maybe setting people up for a little positive anticipation of tomorrow's report.
A better-than-expected third-quarter earnings season kept stocks afloat. Qualcomm surged after its quarterly results. The world's biggest supplier of chips to mobile devices beat sales and profit forecasts and gave an upbeat outlook for the current quarter. Investors see that as a sign the crunch caused by a global chip shortage may be easing. Shares of Qualcomm surged nearly 13%. After the close, sales at Uber came in ahead of targets. The ride-hailing and food delivery app posted its first adjusted profit since it launched more than a decade ago. Airbnb topped sales forecasts, and even though profits surged by nearly 4 times, that was still below expectations. Bad news for Peloton investors. The exercise company swung to a quarterly loss, guided sales for the holiday quarter below market estimates, and cut its full-year forecast. The stock plunged in after-hours trading.
Production problems are plaguing Moderna. The drug maker on Thursday slashed its 2021 forecast for sales and deliveries of its COVID-19 vaccine. It once projected sales of $20 billion, but now sees a sharply lower figure of between $15 to $18 billion. The company put the blame on a temporary impact from the expansion of its bottling capacity and longer lead times for international shipments. Moderna had warned 3 months ago that its capacity was constrained and that it had stopped taking orders this year. It said it now expects to deliver up to 800 million of its 2-dose vaccines this year, down from its prior forecast of as much as 1 billion. Moderna continues to fall further behind rival Pfizer, which just this week hiked its sales forecast for its shot to $36 billion, roughly double that of Moderna's revised target. In the latest quarter, Moderna's COVID-19 vaccine sales amounted to $4.8 billion, falling short of analysts' estimates. The latest development disappointed investors, who drove Moderna shares sharply lower at the market open Thursday.
Nintendo says it can't make enough Switch consoles to meet demand. The Japanese firm on Thursday cut its forecast for sales of the device by 6%. It now expects to make 24 million over the full year. The slowdown comes as a global shortage of chips hampers production, and Nintendo says there is no sign of the situation improving. The firm said it could not give any estimate for how long the problem will last. The Switch has been a smash hit for the firm, but is now in its 5th year on the market. Analysts were already watching for signs of a sales slowdown. Over the 6 months to the end of September, shipments were down by a third. Nintendo's second quarter operating profit tumbled by a similar amount, sliding to $880 million. In October, the firm launched an upgraded version of the Switch, though, and early data indicate that it is giving sales a boost. Nintendo is also banking on a series of high-profile game launches, including a new Pokémon title.
Toyota raised its profit outlook on Thursday as exchange rates played in its favour. The Japanese automaker raised its full-year outlook for operating profit 12% to $24.5 billion, a 6-year high. The company did say, though, that the value of profits earned abroad was inflated by a weaker yen. Toyota also warned the global semiconductor shortage posed a risk to production plans. Like most global car makers, it's cut output this year due to the chip shortage. The firm has already cut its yearly production target to 9 million vehicles, and last month, Toyota slashed November output plans by as many as 150,000 vehicles. While the chip shortage is a worry, the company still saw a big jump in earnings over the 3 months to the end of September. Toyota posted a 48% jump in operating profits year-on-year to almost $6.6 billion, way ahead of forecasts. Higher demand across major markets like China, Europe and the US lifted sales. Electric vehicles particularly showed signs of healthy growth.